AI changes everything. ChatGPT and AI software is taking the world by storm, and AI will change our lives in a fundamental way, just like the internet did and the PC before that. But the real opportunity for investors is where early innovators meet artificial intelligence. In this video, I'm going to highlight 3 stocks that are already winning in this quickly growing market, which is a great way to grow wealth as an investor. Tallulah and I respect your time and we want to give you as much value as possible, so let's jump straight into it. I learned in banking that research starts at the industry level, and then we establish the need, then we look at the players. No one has a crystal ball, not even Tallulah, so this isn't financial advice, but the fruit of my research.
What does that part of the code do?
This code defines encryption and decryption functions. It seems to use AESCBC encryption to encode and decode data based on a key and an initialization vector, IV.
That's right. What neighborhood do you think I'm in?
This appears to be the King's Cross area of London. It is known for its railway station and transportation connections.
Now that is quite impressive from Google's Gemini app, but what really convinced me is this.
All right, give me a band name for this duo.
Golden Stripes.
Nice. Thanks, Gemini.
Okay, I have a soft spot for golden retrievers. Let's look at the data here for Google. And yes, Alphabet is the first stock on my list. And what have we got here? Well, we have cash flow health, that's pretty amazing. We've got growth health, that's amazing. We've got a very, very profitable business that isn't massively expensive. The stock's sort of gone up a fair bit, but not monstrously. So far, so good. So let's look at the chart here. I'm using optionswatch.io, and what do you see? You see a stock that's gone up quite a lot, right? So far, so good. I can click on the little indicator up here and select trend, and that tells me fairly accurately whether or not we're in an uptrend or a downtrend. Look at the bits of red here, down, 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 right? And then over here some more. Look at the green, right? That was pretty much green the whole time. This has been very, very green and so on. So what's it saying right now? Well, let's zoom in and see where we are. We seem to be turning a shade of reddish green. So the momentum is declining a little bit, and that's very much true. But if you are looking at this as a long-term investor, you actually want to buy the dips rather than the ups. So I quite like looking at it that way. I like a stock that's dipped down a little bit. Now, in an ideal world, it would come and hit the 50-day moving average line, which I just toggled on here in yellow. But that seems quite a lot to ask, given the last time it did that was in February this year, where we had a bit of a market. Well, everybody thought Google had sort of lost the plot. But that's generally the line that Google flirts around. You can see that here again and again and again. So right now, if we correct down a little bit more, I'd see it as an opportunity. Now, you might be wondering, okay, Felix, you think that, but what about Wall Street? What are they doing right now? So if I click on Smart in Options Watch, I get to see the smart money trades, and that's dark pool trades. That's trades from institutions, from banks, and so on. And on the last trading day here, I see sorted by size of trade, and these are options trades, so they control a lot more shares than you might think. Pretty much every single one of these trades is red, as in bearish. So the momentum is negative in the short term. And again, that might help us to push the stock down a little bit more and actually find a good entry point here. I like entry points when you dip into these sort of red zones. So as a trader, I use the green indicator to pick rallies. As a long-term stock buyer, I actually aim to buy about halfway through the red zone. So once we've dipped red, that's actually where I buy stocks. Now you can of course play with this for like 30 days for free. Just head over to optionswatch.io and grab yourself a 30-day free trial, and you get access to the full indicator here, the dark pool trades and everything else completely for free. And then if you stick around, I think it's like $16 to $19 a month, and you get the trend indicator, which is insanely accurate, thrown in for free with that subscription, whereas if you joined later, you'd have to pay. But check it out. There is one more bit that makes me like Google more. It's this chart here, and let me explain it to you. This is Google, and Google has a net income margin, so profit margin, that is accelerating. That is a good thing, right? And then it has a PE ratio down here. This is PE, which has actually been declining. So the stock got cheaper. Why? Because margins got better. I believe that AI will make Google's margins pop. That's my thesis. Now, stock number two. Stock number two is, in my opinion, not just the operating system of governments, but large companies. We're talking about Palantir, of course. Before you say anything, let's look at the data. Let's look at just objectively at the data. And here I've got it on the screen. What have we got? We've got tremendous cash flow, tremendous growth, profitable not so much, and the value is a problem. Now, how do you fix a problem like Palantir before you start breaking out into song? All you've got to do is fix the profit problem. You fix this, the stock is cheaper on a multiple point of view, so the value gets fixed. So really, the whole issue resolves around profit. So what's it all about?
The boot camps also have, quite frankly, another massive advantage, because de facto it sets a standard that will be very hard for any other company to meet. So even if you don't buy our product, you de facto have locked in an idea of what's possible. And that means that at some point when you go try your own thing and it fails, you've seen, okay, well, I've seen the art of the possible, and therefore I'm going to go buy it from Palantir at some point in the future. The boot camp motion is an early motion, and I don't think we would say we've cracked the sales motion. In fact, I think our 68% or 94% growth on deals, or 69% on customer, you have to look at this as we are at the way early days of figuring out how to actually get customers to buy our product. We are good at educating customers on what is the art of the possible, and then some portion of those customers buy it. So I expect as we get better and better at that, our numbers will increase. But it is really early days.
So the CEO, Alex Karp, essentially explains, we're running these boot camps, these sales events where we are showing people the software. And they're taking like 20, 30, 40, sometimes more people in each city. And they're getting their existing customers to demonstrate what they do. And then everybody who's there gets to basically set up their company in Palantir as a pilot for free, and they get to see the benefits. And Karp is saying our software is so good. Once they go and compare it to anybody else, they are going to come back and buy ours. And given that they've done like well over 1,000 of these, you'd think that growth will come down the road. But because they're not charging these people for these pilots, because they want to get them hooked on the source, there isn't really a massive uptick in revenue and profits. So the numbers aren't here. For me, that is the opportunity. Now let's look at the chart here and see what's going on over there. So this is the Palantir stock chart. And if I toggle on a 150-day moving average line, in that little purple here, what do you see? Well, you see that pretty much every time we touch that line, we bounce above it. And every single time, if you'd bought along that purple line down here in the $16, $14, $7, and so on, you would have made a boatload of money. Where are we right now? Well, we're ever so slightly above it. You know, we're a couple of dollars, we're about $1.50 above that moving average line, but we're still in this zone that's close enough to it from my point of view. Now, if you are somebody who likes to follow the trend, look at a little trend indicator here, and I have back tested this, and it's an insane accuracy if you have the right strategy. An indicator only does so much for you. You need a strategy too. But look at where it turns red here, right? We get the downtrend. Turns green here, we get the uptrend. sideways downtrend, and so on. And you just go back and back in time, and you just see how freaking accurate this is. You might want to try this. You might want to play with this. So head over to Options Watch and grab yourself a free trial over there. You see, we do free trials. Options, Palantir does free trials. That's how good we think we are. I don't think we're Palantir, but it's a nice comparison, isn't it? So I like the business. I think it's a long-term play. I think once those thousands of pilots start to sign up and become monetized, you're going to see something pretty impressive. Stock number 3 is in cybersecurity. I like cybersecurity for one reason and one reason only, and this is it.
To $459 billion annually by 2025, with cybercrime predicted to cost the world $10.5 trillion annually by 2025, up from $3 trillion in 2015. Commensurate growth in cybersecurity expenditure will be crucial to keep up.
Big corporations like JP Morgan say, look, hacking attempts are up massively. And somebody like JP Morgan spends $45 billion a year on tech to keep the bank safe. 16,000 employees. Now imagine what greater and greater supercomputers can do. If you connect 1 million NVIDIA GPUs like NVIDIA is threatening, imagine how you can hack with that. So for me, the demand is there. There's a guarantee that hacking will get worse and worse, whether it's private, whether it's blackmail, whether it's state-sponsored. And to me, there is one cybersecurity company I particularly like. It is called Crowdstrike. Now, let's look at their numbers. Cash flow is impressive. Growth is impressive. Profit, so-so. Not very expensive. Stocks moved up a bit, but probably has dipped lately. So let's have a look at the chart. Here is the chart. And what do you see? You see a long-term trend that looks pretty good. Again, you see our indicator in the background. That we don't paint that in afterwards. That's happens live, right? So you see how accurate that was if you followed that. The downtrend here from $323 down to $281. Look how well we called that, for example. The rally up since then. And then now, of course, the dip. Now, why did the dip happen? A certain competitor sort of screwed up on their earnings a little bit. And the market got a little bit spooked that maybe AI adoption isn't happening as quickly and so on. So therefore, the stock drops a little bit. Now, as I'm recording this, earnings aren't out yet. They're coming out on the June the 4th. Would I buy a stock just before earnings if it's a long-term buy? Probably not. No, I would probably wait for afterwards. Why? Because I've got more certainty then and it's just a lot less risk here. So I would definitely wait for the earnings event. But yeah, the downward trend is there. It's hitting the 50-day moving average line here again, that yellow line there. Again, if you zoom back in time, we tend to hit that. We tend to bounce off it for, the last year or so, year and a half or so. So we might dip a little lower if earnings disappoint. That could then be a good entry point, or it is just something to nibble on every month, or some sort of options play. Now, never buy options before earnings. They are massively overpriced. Right now, IV percent is 93%. That means options are massively expensive. Wait for after earnings for them to drop if you want to buy options. Right now, you need to sell options, but that's a whole different story we don't need to get into right now. Now, let's compare these 3 stocks and just put them through the ringer and look at what is it actually. Are these actually good businesses? Are these companies that we may or may not want to own? So let me look at here. Google, Crowd, Palantir in that order. These are the numbers I look at, right? I call this sort of our Goat Academy quality score. I have a video out on that if you want to look it up, like how to pick great stocks, I think it's called. We have a whole playlist of educational videos, which you might want to check out. I can link to it at the end of this as well, so you become a better investor. And I share with you my experience and what I learned in the industry. So Google has a 57% margin. I think they can improve that, but it's just about good enough. Crowdstrike at 75% is pretty impressive. Palantir at 81% is the shining star here. Now, the next thing I look at is return on invested capital, ROIC. And for Google, that's 27%. That's very, very good. And it just means that if they invest $1,000, the next year they make an extra $270 on that. So they're making 27% return on that. Crowd is negative. Is that bad? Is that good? Well, it's probably just that they're a newer business and you haven't really got the numbers yet. Palantir is just starting to become profitable, so 4.7%. Again, you can kind of ignore those numbers. They're pretty meaningless. So what do we then really look at? Well, free cash flow margin. Free cash flow. That tells you really this is a well-run business. Google, 21%. Crowdstrike, 32%. Palantir, 27%. So you can see these newcomers, they've been around the block for that long, they are, in a way, running that business better than Google. Now, you could say that gives Google an opportunity to improve, and I think AI will improve it. I think there'd be a heck of a lot less people working at Google down the road. But those two new guys, Crowdstrike and Palantir, are doing a very good job here. Now then you might say, but Felix, these Crowdstrike people are super expensive. Look at this here. This is Crowd, right? This is PLTR, just in case you've forgotten. This is Goog. And Google is trading at 26 times PE. Okay. Crowdstrike, 849 times. I don't care. Palantir, 161 times. I also don't care. Why not? What do I care about? I care about the trend. This is now. This is in 2 years, based on analysts' expectations. So Google drops from 26 to 18. Crowd drops from 849 to 61. That's a pretty big improvement. And Palantir drops from 161 to 39, which means they might almost get invited to the parties. So look at forward PEs and rather look at the trend. Look at the move. Is the move big? If the move is big, it means the company's getting better. It's getting cheaper. What about earnings per share trend? I care whether they continuously improve their earnings per share every single quarter. Now, Google only's done it half the time. That's pretty appalling. Crowdstrike, 87% of the time. Palantir, 87% of the time. That's pretty good. So for me, Google is like almost like the turnaround kit, but it's so big. It's got so much data. It's got such access. I mean, you say, Google it, right? How often did you say that a day? But the new guys, I think, are, on the face of it, actually possibly better businesses. I hope you got some value out of this. If you have, get yourself access for free for a month to our trading information platform Options Watch, which gives you the indicators and the dark pool trades and much, much more support and resistance and everything else. And if you want to get a little deeper into this and how you pick great stocks and not knock over your microphone, that was a good catch, wasn't it? Then head over and check out our educational playlist, which I'll link to here at the end of the video. Thanks for tuning in. Picking great stocks is much simpler than you think. And that's why my chief financial analyst said to me, Felix, why don't you package your banker knowledge into 5 or 6 simple criteria that beginners can follow to find great stocks and create tremendous wealth.